Bryce Carter is the CIO and financial advisor, Financial Strategies Group in Okemos. Bryce, welcome back. Let's talk about the SVB failure.
Yeah, Silicon Valley Bank. Thanks for having me. This is a kind of a stir for a lot of people. Is we don't see very many big bank failures in the U.S. We haven't since 2008, right. And it's the big. I think it's the fourth biggest bank failure in U.S. history. So it gets people jittered a little bit. The long and short of it is they did a poor job of managing their assets. And when interest rates started to rise and those assets went down in value, there was a little bit of a run on the bank. Mm-hmm. The Feds and Treasury stepped in and saved the depositors, the customers, right. Not the investors in the bank. But it shook a lot of nerves for people.
Well, I'm curious about investments. Yeah. What does it do for?
So the investors in that bank are out of luck. Similarly, we saw that Credit Suisse sold to UBS a few weeks ago. Now, that's the biggest Swiss bank, and it's 156 years old, and investors took a huge loss on that as well. So all of this has to do with the Fed raising interest rates, and it puts pressure on the bonds that these banks hold.
Should I be concerned at all about my local bank?
I don't think so. I definitely think that we'll probably see some other banks fail. Actually, the banks fail quite often. We don't hear about it.
Yeah, I was going to say that's something.
We see maybe a couple dozen a year, smaller banks mostly, so it doesn't make news. And most of the depositors are under that $250,000 threshold, right. That you're protected by the FDIC. We'll see other bank failures, but I don't think this is a systemic problem that's going to, eviscerate throughout the financial system.
Right.
So in general, I don't think that you need to be concerned. Although you should be spreading out your assets if you have more than $250,000 in a single account at a banking institution.
And that's what you can help guide people do.
Absolutely. I give all kinds of financial advice, and most of it's good.
That's helpful.
Is now a great time to start investing?
I think that there's never really a bad time as long as you have your house in order, right? So you shouldn't be worried about what's happening in the market today because you're always investing for the long term, right? It makes no sense to invest for this month but not for the next 20 months, right? So it's important to have those long-term conversations anytime we're talking about investing and moving money.
And the sooner you can start, the better.
Compound interest is your best friend.
Yeah. I finally got my 19-year-old to start, my 19-year-old stepdaughter to start an investment account.
Because of me? You're welcome.
Yes, thank you for the nudge.
My nephew, 19, he just told me, Uncle Bob, I just started an investment account. I'm like, good.
Yeah, you're way ahead of us.
Starting young. I'm like, dude, you could be a millionaire by the time you're my age.
You could be a millionaire well before then with compound interest.
All right.
I
didn't go old.
You can get more information on the screen. Thank you.
Thank you.